Welcome to the latest weekly report for the 27th of January 2015. As we talk about finance still, must inform you and disclose the risk warning here. All advice is of a general nature only and it must not be construed as personal advice is key there. Okay, let's have a look at covered calls first up. And last week of trading, let's just quickly flick over to the XAO first up. Has been quite a positive week. Let's just adjust this chart a little bit there. There we can go. We can see it's quite a positive week, up around 200 points last week, and at the moment today being Tuesday, first day of the trading week, 4-day trading week. We are just testing that high, that November high there of 55.50. Okay, so which is also the high in May. It was also 55.50 as well. All right, so we'll have a look at those levels more closely in just a moment. Let's move back to the daily chart. You can see on a daily basis there 4 really strong consecutive updays there after suffering about 7 down days through middle of January. So it seems like the fallout from the victory by the far left in the Greek elections was limited. In Athens, the burst dived 3.2%, but the Euro Stoxx 600 was higher as a result. So perhaps the market had largely priced in the effects there. Let's have a look at BHP, and iron ore traded lower, went as far down as, 63.54, so a drop of 4.3%, almost $3. And I'll just quickly show you Fortescue in just a moment, but BHP still below our put protection at 31, so we're insured against the subsequent fall, as you can see here, but still very volatile trading, as you can see. But the movement in Fortescue much worse, and they've actually, looks like they've recovered to be at $2.04, but hit a we'll have to go to 10 years, so hit a new post GFC low there, level we haven't seen for over 6 years by the looks of it. So tough times at Fortescue. AMP's just cruising along okay. Hasn't really gone up a great deal, just trading this sideways range between $5.30 and $5.60. Looks like it could be breaking to the upside though, which is good for our covered call there at $5.50, and perhaps they might even increase the dividend, which would be good for the stock as well. QBE as well is, well, it hasn't been great, but it has improved over the course of the day. It's been bought up quite nicely below $10.40, but we would like it to move back towards that $11.50. Our break evens, I think, $10.82 before we sell another call option. It's a little bit under the bridge at the moment, but by no means that far away. We've had a couple of profits since our last report. First up, Macquarie. That was 3.66% there, and it was really good timing, because we did buy back the call options on one of these lower days here, which was about a week and a bit ago. And then they reported, and the report was good, and you can see it was pushed up by the market 7% or so that day. Had a little bit of pullback here, but we got out around that $60 mark here, which was a 3.66% minimum. Some people, if they entered a bit lower, would have got close to the 4% yield on that trade. That was held for that was a 2-month trade in the end, but after we entered in late November, you can see we entered around 55. We entered around 55.15 or thereabouts, and besides a little bit of a push up in early December, we've spent most of the time underwater. So to get a nice turnaround there and a respectable reward is good. And the other trade, Woolworths. Woolworths was a real cracker. It was only 3 weeks in the trade. Bought in around, I think it was the 6th or so just around under $30 there. Showing a bit of promise last week, but really it was just today where it's taken off above $32. And after 3 weeks they're locking in 3.36 at a minimum there. Some people doing a bit better as well if they bought in a little bit lower. So it's been a good week for covered calls with the market going up. It hasn't been as good a week for option trades, but having said that, Iluka, some people lucky getting out of Iluka at just about a break even there as it pushed 720, 728 it hit. The problem was though, it was very short lived above 720. It had a little touch up for 5 minutes there, and then it was up above it for about 20 minutes. 20 minutes at around 2 o'clock. So pushed through as many orders as we could, and as soon as we started pushing orders through, you can see what happened with the stock. It had a solid fall and it's been falling ever since. So look, it is a stock that can push 50 cents or some 8% in that day. Hopefully that happens again tomorrow or Thursday, and we can square away that position out of the books as a scratch trade. What other trades have we had? We got Newcrest. Newcrest not working for us with the stock pushing upwards. It's been unusually strong. Gold was off $20, but the stock still has hovered around that 1350 mark, and you can see the story is there. Looks like a bit of resistance around this $14 mark, so we're watching that closely. Last time it reversed there, it was down $7 within 4 or 5 months. Not sure if it'll do quite the same again. Has found a fair bit of support around 950, but nevertheless, that's Newcrest in a nutshell. The other two stocks that we have interest in at the moment is CBA. CBA had quite a solid fall last week, and it's had a surprisingly large gain today without any official news coming out there. So having a little bit of a pop-up might be due to its dividend coming up, but it will be interesting to see if this pop-up here will be followed by an equally aggressive push downwards as those dividend chasers switch over to the next stock. So we'll be watching that closely. We do have European options there for February, taking advantage of of the drop there where we were in a very small profit for the January options, and we'll continue to look for that movement down, especially after its dividend. And lastly, Wesfarmers. Wesfarmers is a new trade there, and it's been holding fairly steady since we got in on Thursday. In fact, on Friday had a solid push down towards $43, which is looking quite promising. Just zooming out a little bit, you can see that that resistance around that $44. It might still have a little bit more to push up because it hasn't gone there. But having said that, earlier last year it did reverse around that 43. What's that? 75 mark, which is where we were the other day. So, looking purely from an overbought, oversold perspective here, this stock is trading in a sideways trading range, and we'll be looking to see that stock move down towards about the 42, even $41 mark is ideal. And with its dividend coming up next month, that should also help push it down by about $2. Alright, ladies and gents, I'll wrap it up there. That's the news update for the week. and we'll talk again this time next week. Thank you for your time.